Your money is going to waste. Let's say that again. Your money is going to waste. Tax dollars today are being squandered mostly on aspects that do not benefit the people paying into them. Yet, there's more of a push today than ever before to increase spending and therefore increase taxes to fill the void. Somehow, though, the disposable income of the middle class declines, and as a result, more debt is needed. This is serious business. You came here for the truth, so let me unveil that for you. Today I'm going to talk about the infrastructure bill. We're going to look at how much money is being spent. We're going to talk about the debt. I'm also going to mention what happened with the Coinbase IPO. We're going to look at some charts, a lot to cover. Let's go. Apparently, the government wants to spend an estimated $4 trillion across two different infrastructure packages. The first part of the package, which carries a price tag of $2 trillion, would be paid for by corporate tax increases. It would authorize improvements to bridges, roadways, money for home care services, and an investment in American manufacturing and more. So you read this and you think to yourself, okay, well, at least it's going somewhere where I put my money in and over time that's going to pay for itself. You don't want to have bad roads. You want to have the electrical grid running sound and smooth. You want to be able to get to where you need to, and it's going to be safe, and it's going to be convenient, and so on. But what if most of the money was going in wasn't actually going to benefit you? What if it was going to bureaucracy? What if it was going to other things and they call the bill an infrastructure bill, and yet only a small percentage actually was going into those things that they're talking about, that they're selling the public on? Would you be upset? So stay with me here, okay? So apparently they want to do yet another round of relief, and that would, of course, a fourth stimulus check be included in that. $1,400. We'll see what happens. This is what they want, okay? More money, more stimulus for the people. They get their $1,400, and we'll see what happens, okay? Just keep an open mind for a second here. Out of the daily reckoning, under 10% to actual infrastructure. So that's the title here, subtitle actually. And I want to know what he's talking about. But just reading that, are you intrigued? Are you interested? Stay with me, okay? Proponents of the bill claim the spending is for infrastructure, but most of what they're saying about this legislation is phony. Most Americans understand infrastructure to mean bridges, tunnels, roads, railroads, airports, and other needed additions and improvements to the transportation network. And I agree with that. Okay. But the bill only provides about $400 billion for those type of projects. That's under 10% of the proposed total. The rest goes to windmills, solar panels, subsidies to electric vehicles, and school repairs, or brackets here, as a payoff to teachers' unions. Even more spending goes to items that have nothing to do with infrastructure, such as daycare, tuition, unemployment benefits, community organizers, and other welfare-style programs. In other words, it's more of a political project than an economic package to provide good jobs to stimulate the economy. Now, of course, there's a lot of politics going on today. We've seen this happening over the last few years more than ever before. But it's important to know where your tax dollars are going, and you have to be able to have some sort of say in this. You as the individual are putting your hard-earned dollars. The biggest expense likely that you will have to have is your taxes. You know, depending on what you're making, depending on your brackets, you got to look at this and see for yourself. They're taking 40% of your income, let's say. 40% right off the top. Nothing else probably comes close. But nobody says anything because they say, well, we've got to have the roads, right? I mean, how else are we going to have the roads being built? I've seen statistics, depends on where you live. I actually want to do a full video about this. 7% actually goes to the sort of the roads and all of that, which is usually the primary thing that people say. We got to pay taxes. Someone's got to build the roads. 7%. But the 7%, based on my understanding, is not actually the building and the maintenance of the roads. It's the departments, it's the bureaucracy, it's the administration of all of that. So it's only a fraction of that 7%. What is it? Maybe 1%? Maybe less? I don't know. I wish I could get you some more clear details. But understand what we're seeing here. The bureaucracy around all of this, the politics around all of this, are bigger than anything else. Your tax dollars are certainly going to waste. March retail sales are expected to have surged as consumers spent their $1,400 checks. No, they don't want to save them. No, they don't want to soundly invest them. They want to spend. And a lot of people actually were forced to spend at this point because they finally got some money in. If they've been unemployed or underemployed, they needed that money. At the bottom there, it's reopening, it's stimulus money, it's weather payback, it all conflating to be a gangbuster number. I think we're going to see a very strong numbers going forward. We're off and running. Fantastic. Everything is totally fine. And you know that the unemployment rate at 6% is just totally true. So we should believe everything that they say. But we actually get a little bit of truth here. Out of CNBC, the economy is running on a stimulus-fueled caffeine high. What will happen when it wears off? The U.S. economy is widely expected to show its biggest growth in this year since 1984. Of course, let's not talk about what happened last year. They just show, all right, everything is totally fine. Forget about all that which happened previously. All you need to know is that everything is okay. But once the drivers of the growth, and that is, of course, the government spending, that once that fades away, the path beyond that looks challenging. Economic inequality is one issue. Another is fiscal issues that the stimulus will leave behind. You can't get away with all those problems. You pump in money, it has consequences. Quote, I don't see the growth as being particularly durable. Of course not. Why would it? When you're pumping in the money the way that they do, you can't necessarily predict what's going to happen, but you know that some people are going to benefit a lot from it and others might get the crumbs and a bunch of others get nothing. There were some tips right here in this article out of NBC. He's talking about the food prices rising and so on. I'll cover them just really quickly, and then I want to make a point after. Budget-conscious shoppers can try out some perennial advice for reducing their bills. A couple of digital twists. This person here just saying, getting the Flip app or a price comparison app like Basket. Also includes online prices with that particular one. You can take pictures of items with their prices to help remember what the average prices are for costlier items. Going through at the bottom there, basically, just tips, okay? Save money at the grocery store. But nobody ever seems to wonder, why are prices rising? 2/3 of Americans would rather exercise at home than go back to the gym. And this just shows you based on a survey of 2,000 people, but it gives you some insight. And so I'm thinking right now about what has happened with this entire industry and how much has changed over the last year. And that brings me to the Money GPS Insight. This is a new part of the show, and we're going to talk about the last two articles. You have an issue that is clearly present today, and it is that the government and the Federal Reserve are both expanding their means as much as possible. But the average person doesn't generally see the benefits of that. We're looking at higher prices in everything. We are seeing that people get the short end of the stick. You get the $1,400 check, and the government, those different institutions, those different beneficiaries of all that stimulus money, the billions and billions, go to others. And so you get the crumbs, they get the big stuff, okay? And then we have, of course, the different industries that are rapidly changing. You look at that as being one of them where people tend to like to work from home now, work out from home, I should say, because, hey, I don't need to go all the way to the gym, especially now that so many people have moved out, out of the city centers. They're not working out at downtown where they might have had a gym within a 5-minute walk. Now it's a 15-minute, 20-minute drive for them. You got to go there. Do you use the facilities there? I'd rather be at home, they say. So, of course, depends on the type of workout people are doing. But if they were just going to go on the bike, well, now they bought their $3,000 Peloton. They're going to use it at home. So this is a big change for that industry. And unless I think, people can be really creative, this is going to be an issue for a lot of people in that industry. There are new technologies coming out that are really, really let's say, interesting as an investor. So I wanted to make that clear. So Coinbase came out on Wednesday and the shares rose as high as $429, briefly giving it a market value of over $100 billion. That changed afterwards. But I just wanted to note the fact that this was very bullish for Bitcoin, even though technically they shouldn't be as correlated because this is a stock, but I understand that there's a lot of attention around it. There's a lot of euphoria around it. This has made buying and selling easier for people. So there's a lot of attention, a lot of eyes are focused on anything to do with this space. And then, of course, the shares closed 14% below their opening price after their trading debut. So it popped up initially and then it fell down. Perhaps a pump and dump? Well, we'll see. The price of Bitcoin certainly stayed elevated, but if you look at Coinbase itself, although valued at $86 billion, the first day didn't work out so well. Cathie Wood, the person you only know and have ever heard of because of the extreme investment into Tesla, quote, too much money is chasing too few good opportunities in SPACs. And basically saying that there's so much money into these, a lot of them are going to be worthless at some point, or at least worth less at some point. And that's what she's saying. And instead, what we should do is focus on quality names and so on, which of course I can definitely agree with. Walmart said it will shift more of its U.S. workforce to full-time status, the latest move by the nation's biggest private employer to hold on to staff. So the numbers they give right here translating to about 100,000 more full-time positions than it had 5 years ago. So at first glance, this is very positive for those people because, of course, that security is something that people want, something that people need right now. If they're full-time, perhaps they'll have their benefits and so on. So this is definitely a bonus. We'll see what actually happens and how this all unfolds. But in the near term, this looks positive. I wanted to just note something about Bernie Madoff. We always say Bernie Madoff, talking about the Ponzi schemes and so on. But I think it's important to understand how the system itself is a Ponzi scheme. It's taking from you every single day, and it is a fraud. The system is designed this way, and they burn a person here and there, but ultimately we should be looking at the deeper structure. That's all for this video. If you found that informative, hit that thumbs up button. When you do, you are supporting me by clicking a button on your screen. Thank you very much. If you want to learn e-commerce for free, do it at theamazongps.com. If you want to know about the financial system, everything is right here in these 2 books. Check it out at the link in the description. Have you seen this video yet? If not, you definitely want to check it out. Click it, and I'll see you there.